Vanakkam Friends. இன்று நம்ம பேச போறது India's one of the most exciting and powerful sectors. அதுதான் டிஃபென்ஸ் செக்டார். நம்ம நாட்டோட டிஃபென்ஸ் மினிஸ்ட்ரி ஒரு massive 15-year strategic roadmap ரிலீஸ் பண்ணிருக்கு. And guess what? Over the next 15 years, India plans to spend several $100 billion on modernizing our armed forces, Army, Navy, and Air Force. Imagine this. 1,800 next-gen battle tanks with drone integration, 10 advanced war frigates for the Navy, 75 high-altitude satellites for the Air Force. இது ஒரு modernization அல்ல. It's a transformation of India's defense backbone. As a taxpayer, it feels proud to know our money is strengthening national security. But as an investor, this sector offers massive opportunities. Because where thousands of crores flow, companies behind those contracts will thrive, and that's where our focus is today. இந்த வீடியோல நம்ம பார்க்க போறது top 5 defense companies in India. அவங்க fundamentals, growth story, valuations, order book details, strengths and weaknesses எல்லாம் in depth. ரெடியா? Let's begin the mission. India's defense stock revolution 2025. Before we get into the video, here is an important disclaimer. இந்த வீடியோ purely education purposeக்காக மட்டுமே. It is not financial advice or a buy-sell recommendation. Stock market investments involve risk. Please do your own research or consult a certified financial advisor before investing. Okay friends, first company BEML Limited. Bharat Earth Movers Limited. இது ஒரு classic PSU. Government-backed company working in defense, mining and rail sectors. Company overview. BEML is not a new name. இது tanks, missile launchers, heavy-duty vehicles, rail coaches and earth movers manufacture பண்ற company. So it supports both defense and infrastructure sectors. Financial highlights. If you look at their margins, 2021ல 5.63% இருந்தது. 2022ல 7.4%, 2023ல 9.97%, 2024ல 11.98%, 2025ல 13.2% வந்திருக்கு. Consistent margin growth. Management guidance சொல்றாங்க FY26 குள்ள margins 15% வரைக்கும் போகலாம். அது என்ன அர்த்தம்? Even if the company's top line, அதாவது sales doesn't grow fast, profits will still grow because margins are expanding. Growth guidance. Management says we are targeting 20% CAGR growth in revenue. Now that's ambitious. But confidence level high இருக்கு. Order book. As of FY25 end, BEML's order book stands at rupees 14,000 crores and increasing every year since 2022. But let's be realistic, only 27% of their total revenue is from defense. Rest, mining and construction 54%, and rail and metro is 19%. So this isn't a pure play defense stock. இதுதான் இன்வெஸ்டர்களுக்கு mixed signal. If you want a defense only focused stock, BEML may not fit 100%. ஆனா diversification point of viewல இது ஒரு balanced PSU. Valuation. Median PE last 3 years around 53. Current PE 56. Price to book from 4.9 to 5.8 now. So slightly overvalued, not a cheap buy. Verdict. Strong margin growth, solid order book. Warning, defense revenue contribution low. Warning, valuations slightly expensive. So BEML ஒரு diversified PSU play rather than a pure play defense gem. Next company, Bharat Dynamics Limited, BDL. India's missile manufacturing powerhouse. இது anti-tank missiles, torpedoes and air defense systems manufacture பண்ற company. Financial overview. But when we look closer, revenue and profit growth very lumpy. FY21 revenue around 3,800 crore to FY23 4,054 crore to FY25 4,022 crore. Flat trend. PAT. FY21 57 crores, FY22 499 crores, FY23 352 crores. Huge fluctuations. Margins. FY21 18%, then 25%, drop to 16%, then 22%. Consistency illa. Order book. But one big positive, order book of rupees 22,800 crores FY25. That's higher than BEML's order book. ஆனா execution timing clear இல்ல. How much of that order gets delivered next year? Unknown. Moreover, management recent con call கூட நடத்தல. Lack of communication investorக்கு risky signal. Valuation. Median PE 67, current 96. PB ratio median 9.6, now 13.6. So very expensive valuation without matching growth. Conclusion. BDL has strong defense credentials and missile tech base, but inconsistent financials plus high valuation make it a risky bet for 2025. Now comes the flagship of Indian Defense Electronics BEL, Bharat Electronics Limited. In the company almost synonymous with India's defense backbone. Radar systems, electronic warfare, communication, night vision, BEL does it all. Strength. Almost 90% of BEL's revenue comes from defense. That's a pure play defense stock. Financials. 5-year revenue trend, consistently growing. From 13,800 crore FY21 to 23,000 crore FY25. Profit margins. EBITDA margin from 22% to 25%. PAT margin now at 23% up from 15% just 4 years ago. Order book. Massive 80,000 plus crore order book. Plus waiting orders like QRSAM missiles worth rupees 40,000 crore more. So that's nearly 1.2 lakh crore potential visibility. Growth outlook. Management expects 16 to 17% CAGR revenue growth. Slightly below BEML's 20%, but BEL's base is much bigger. Valuation. Median PE 40, current 51. PB 10, current 14. So again not cheap but justified by strong pipeline and dominance. Verdict. Pure defense play, consistent growth and profits, massive order visibility. Warning, slightly expensive valuation. BEL is like the backbone stock of Indian defense, stable, profitable, long-term compounder. இப்போ நம்ம பார்க்க போறது இந்தியா ஸ்கைல பறக்கிற giant. HAL. HAL builds fighter jets, helicopters and aircraft systems for the Indian Air Force. Order book, massive. FY24 94,000 crore to FY25 1.89 lakh crore. That's double in 1 year. Expansion. HAL doing 14,000 to 15,000 crore capex to expand manufacturing. It's a strong sign of confidence. Financials. Revenue growth only 7 to 8% top line. But PAT growth 24% CAGR over the last few years. So even with slow sales growth, profit performance strong. Valuation. Current PE around 36, cheaper than peers like BEL or BDL. So HAL looks undervalued relative to quality. Warning. Management guidance for FY26, 7 to 8% growth only. So don't expect sudden 20 to 25% rally type growth. Verdict. Biggest order book in India, solid profit growth, reasonable valuation. Warning, slow top-line growth guidance. HAL is a steady, strong PSU compounder, safe bet for patient investors. Next up, a private player leading India's defense electronics revolution, Data Patterns India Limited. Overview. This company designs electronic systems for missiles, radars and satellites and supplies to DRDO, ISRO and Indian Navy. Financials. Superb track record. Revenues have grown at 33% CAGR. Last 5 years. Consistently. Every year profits also rising. No misses. But recent quarters warning sign. Q1 FY26 margins dropped EBITDA 32% to 32%. Net margin 32% to 26%. So margins under pressure recently. Order book. Order book dropped from 983 crores FY24 to lower in FY25. And new orders haven't picked up yet, that's a red flag. Valuation. Median PE 71, current 67. Still high. Price to book slightly below average but not cheap. Verdict. Consistent past growth, strong niche in electronics, warning, margins contracting. Warning, order slowdown, warning, high valuation. So data patterns are high potential but currently cautious play. If order inflow resumes, stock can bounce, else might underperform short term. Sorry friends, number 5 companies analyze பண்ணாச்சு. அந்த டேட்டால இருந்து takeaway என்ன? BEML, diversified PSU, decent margin but not pure descents. BDL, strong missile tech but inconsistent growth and costly. BEL, the most stable and powerful defense play. HAL, huge order books, solid profits, steady long-term bet. Data patterns, private innovator, high potential but near-term caution. இப்போ India's defense budget continues to rise every year. So defense sector is not just a patriotic theme, it's an economic growth story too. But remember, long-term investing requires patience, not hype. So choose fundamentally strong companies with order visibility, reasonable valuations and consistent management guidance. And as I always say, stay smart, stay safe, happy investing. Disclaimer. In the video purely educational purpose kaga mattume. It is not financial advice or a buy-sell recommendation. Stock market investments involve risk. Please do your own research or consult a certified financial advisor before investing.